I'm wearing black because I'm about to go to crypto's funeral. Welcome to the Sunday crypto update. I have maybe some good news, probably some bad news, but we're going to go through all of it. Again, we're doing a really high time frame analysis. I'm going to go over a few things that I told you last week to be aware of. And now that the week is closing, we get to reassess that stuff. And I'm also going to show you why I was probably one of the only people on the internet that told you we were probably not going to break out this time. And if you've been watching this channel for a while, you will know that when Bitcoin hit that 53, 54K region and we started the new run up to 70K, I was quite skeptical the entire time. So in this video, I want to dig into why that was, because it turns out that skepticism essentially saved myself and anybody who watches this channel. But there is one positive thing happening on the current Bitcoin chart that we need to keep an eye on that may give us a hint that things aren't going to get too much worse potentially for this week, but it's a big maybe. So let's get into it in detail so you know exactly what to look for. If you are new here, welcome. If you are returning, welcome back. I am Annie. This is Trade Travel Chill. Be sure to smash that like button and hit subscribe if you're not already subscribed, because this is your home of deep dive analysis on Bitcoin, which we all know essentially controls the entire crypto market. So let's get into it. So let's take a look at Bitcoin on the daily time frame. Now, this is the area that I was talking about where, I said I was really quite skeptical on this run up. Now, I mean, it did push up higher than I expected it to. It did get up to 70K. And there was a point where I was like, oh, am I going to be wrong this time? But I stuck to my guns based on the technical analysis that I know, that I understand, and that I trade. And now that we have pulled back from that region, I can now explain to you why the chart was telling me remain cautious on this run up. So let's just assess this price action right here. The main thing is when price is going to hit a new macro direction, we need to see an increase of volume come in. That's what gives us the hint that that direction has confluence and it's a direction that we can trust. Now, you may know that the candle colors that we use on this channel help us to track volume. There is also a new candlestick pattern that you can use on TradingView. Oh, it's not brand new, but it's fairly new here, called volume candles. And if you click on that, it basically changes the thickness of the candles depending on how high the volume is. So that might be something else you want to try out as well. But when a new direction starts, we need to see the increase in volume. So when we hit this level down here at, I think it was around 54, 55, and then we started to push up through here, notice how all of my candles are white and gray. There was no increase in volume there. Whereas when you look here, see we have this big green vector candle here and another one here. This was an attempt to try and push price up to the top of the range. As we come down, you can see that they are red. That's an attempt to push price down to the bottom of the range with a high amount of volume. But here we didn't get that at all. And when you look at the actual volume bars as well, the highest peak in volume was this red candle here, which we call a stopping volume candle. It is a candle that has a small body, a very large wick, and it's designed to stop the momentum of the current trend. So here, the momentum was to the downside. We had a high volume, small body, large wick candle that stopped that momentum to the downside. And that's essentially where we ended up bouncing. But following that, we never had high volume again all the way up until they then did the exact same thing in reverse. So you can see here we have now an inverted hammer. We have the wick at the top. It's a high volume wick. It was stopping the momentum to the upside. This is a very key candle formation that you really need to keep an eye on, because it can give you a hint where the market might pivot, especially when you can identify them on higher time frames, and especially when they give you a formation like that into another high volume area, which was this candle that I've marked right here. So when you have a look at the volume bars down the bottom, just have a look at the spikes out in this entire range. The spike here is red, red, red. There's a couple of green here that was in this push up, and then mostly red as well. So the highest volume that we're getting in this range is to the downside. So here's what you need to understand about market makers. They're going to sell to you at the highest price possible. So they drive price up like this, and they drive it up with high volume to get you to FOMO in. And then at the highest price possible, they sell to you, which triggers the reversal, and then retail jump on in panic and fear, and the market comes down. I want to show you where this has repeated before. That was a very clear signal that the bull market was over. That's to be clear, not what I'm saying is happening now, but all I'm saying is that what I've seen happen in the past that I'm about to show you was my reason for being cautious in this range right here. And that is on the weekly time frame for Bitcoin in the last bull market. So as you know, if you've been around since the last bull market, we had our initial run up to about 65K. And then we had a really huge sell off back into the 30 region. And we kind of held there for a couple of months. You may remember, if you're around in that cycle, when we broke out of that zone and we started heading up again, all throughout this price action right here was when many people on YouTube were saying, now we're going to break and we're going definitely to 100K. 100K minimum was the target, and everybody said this was just a pullback. The bull market is not over. We're pushing right through. Can you see how similar this price action right here is to this right here? There is a complete lack of volume in this final push up. Even when you look at the volume down here, you can see that it was declining volume and rising price is a divergence. This was the market maker selling to you at the highest price possible. And eventually now we know that is what triggered the bear market. So this was very similar to what was happening here, which is why I remain skeptical. And when many people started saying that this time we're going to break out of the range, I maintained a potential eventual 51 to 54K target. And we'll talk about that target in a second. So now let's talk about the possible potential positive for this week coming, because it sits on the daily time frame, and we're going to zoom in and look at this current range right here. You will notice that currently the daily candle has retested the 200 EMA, and at this point in time, both of these candles right here are above the 200 EMA. In addition to that, this move down over the week has wiped out a large level of liquidity, and usually things don't just go down in a straight line. So one thing I'm going to be looking for this week as the week opens is to see if price does remain above that daily time frame 200 EMA. That won't turn me bullish, but I'll tell you what it will do. It will make me think that there's going to be a possible attempted recovery. It could be to the halfway mark of this whole range at about 63.5. It could be halfway to this vector zone. I kind of like that whole area because it also lines up with the 50 EMA. And if we get to there and we still look weak, then I would say we're going down for the next level drop. Whether that level takes us straight into this liquidation zone at 51 to 54, I can't say, I don't know, but I personally wouldn't like it to get there so soon. We are only at the beginning of August, and we do expect August to not be a great month. So if we were to hit that 51, 54 region at the beginning of August, I'd probably be a little bit worried that that wasn't the worst of it, and we may be coming down for this area at 45 to 47, but we won't worry about such low targets until we've seen kind of what's happening in this range right here. So this presents a couple opportunities. Number one, if you got caught in this move to the downside and you're holding on to things that you don't want, or you want to sell out and buy in at lower prices because you believe it's going to go lower, then look for this short-term recovery and assess if you do get that lower high on the daily time frame, and you want to be selling things at the highest point possible, not the lowest point. You don't want to be panic selling out of things, which is what retail have been doing this weekend. You want to be selling at the highest point possible. So have a look. See if we do get a bounce, if we hold the daily 200 EMA and we're lucky enough to get back up to around 63, 64K, that might be your area to offload. Now that this liquidity has been taken out, I want to also refresh the liquidity to see what is around. So I'm going to use HighBlock to do that and save time. I just did that off camera. However, if you are looking to get a HighBlock subscription, they have so much more than just the heat map liquidation data. There is a link in the description of this video. It does get you, I think it's about 15% discount on their memberships. So that is what I would be looking for on the daily time frame anyway. Some hope of a recovery, because I tell you what hasn't happened this weekend. There hasn't been a good opportunity for retail to get in on retests to short. We have literally just been heading straight down. When you look at the 4-hour time frame, it has just been straight down. EMA traders had a chance, but anyone looking for a retracement to get in on a short position, you haven't been given the opportunity to do that. And so for people looking for bounces to sell out of things that they don't want, they haven't been able to do that either. One other positive positive that I see on the 4-hour time frame is price seems to be settling above this vector right here. So again, if it holds this level, that may be the beginning of some sort of a short-term recovery. I would not say that the damage is done and we're going up from here. I do expect August to still overall be a bad month, and any moves to the upside should have the intention of selling things you don't want anymore, and any big moves to the downside should be your opportunity to potentially dollar cost average in things that you do want. Now, the new week opens Sunday, 5 p.m. New York time. So it has not opened yet at the time of filming this video. But when I look at the 1-hour time frame, I can see that the high of last week is going to be up at around 70,000, nearly 70,100. The low of the week is going to be this weekend low, unless, of course, we get any lower before the market opens. And that's currently at about 59,800. This isn't a clear reversal pattern, what is happening on the weekend right now. I know some people, if you're trying to learn off my YouTube videos, you might wonder if this is a W formation. It's not a clear W formation right now. We are well and truly under the 50 EMA. Volume has not come in yet to push us up to that level. This isn't really a stopping volume candle. The highest level of volume was on this green doji right here. And then we actually broke lower than that. So it's a gamble. It's a risk to believe that this might be a W formation and that we're going to break out to the upside. I would definitely want to see some volume coming in before jumping in on any potential recoveries, remembering that they are only going to be short term until we can assess what happens if price does get back to that daily time frame 50 EMA. So this is not looking great. This is simply just looking like it's still the weekend price action and it's very, very low volume. All I can really tell you is if we don't come any lower than these wicks right here, then these are going to be your trapped traders. However, there is still hours to go until the market opens. So if we do continue to head down, just be looking where the wicks change direction. And so what I mean by that is when we're forming peaks, see how the wicks are all at the tops of the candles? This is a sign of a reversal being imminent. So you can see on the move up, wicks are at the bottom, at the bottom, at the bottom. They hit the peak, wicks change to the top of the candle. That's where you know reversals are about to happen. Actually, in this zone right here is where I took a short on Solana. It's hard to see because I had to zoom out a lot to get the whole price action in on this chart. But if you go back and check around the 29th of July, you'll see that these candles right here, the wicks turn to the tops of the candles, and that is your reversal kind of signal. And then now as we move down, you can see that the wicks are starting to turn towards the bottom of the candle. So it's a good start, but you still need more confirmation before opening any long positions there. Let's take a look at some spot situations for anyone that is wanting to add to their bag. Ethereum was really actually quite beautiful price action recently. See how it rejected right here at the point of control? That was perfect. There was liquidity there that got taken out. It's now above price. And there is also this zone down here between 2,600 to about 2,800. It's currently right on this support level right here. So again, if Ethereum bounces out and gives a short-term recovery, look for lower highs. If we get lower highs, if we get any weakness that shows us we're not going to change market structure, then you would expect that we're likely to come down into this zone next. Solana's price action is really quite atrocious, really. But before we get into it, if you are looking for an exchange to trade on, be sure to check out the links in the description of this video, because every exchange partner that we work with on this channel, we make sure that we can give you a trading fee rebate on all of your trades for life. This is going to help you save money on your trades, because trading fees over time can really add up. And if you use those links down below and you decide to join TTC and get a membership with us to learn our methods in full, you'll also get access to trade alerts that will help you whilst you're learning to trade. So all the links are down below. Be sure to check those out. There is also non-KYC options for people who struggle to find an exchange to trade on in their country. So looking at Solana, we have a pretty decent liquidity zone between 132 to 139. The highest level in that zone is actually 132 to 134. And then there is another one lower than that, but the 132 to 134 really is quite significant. Below that is 118 to 128. Look for a recovery. We do have a vector candle here on Solana. If price moves up into any part of that vector candle and shows weakness, expect that we're going to come down into these lower levels next. Now, before you go investing in altcoins and thinking this is a buy the dip moment, you need to understand that we've got a lot more macro issues going on that, you know, signal it's worth keeping an eye on Bitcoin. It's worth dollar cost averaging in there. However, altcoins could continue to bleed out if the rest of the markets continue to come down a lot. When we have a look at the S&P, this was an area that I highlighted in our Discord to look for short opportunities. We got a perfect retest into there. When I zoom out on the daily for the S&P, this was kind of the play that I was looking for and am still looking for, to be honest with you, because if we get something like this, that is going to be not great for the stock market. And this being the daily time frame, it could take a couple of weeks to do that. Again, it's why I kind of feel like it's a bearish month for crypto, because crypto won't be able to be independent of this. If we do get a play like this on the S&P, it's going to be affected no matter what. There is something that I'm a little bit cautious of, and why I'm not really kind of willing to say it's all over at this point in time. And that is what I'm still waiting to see evidence of, is that this price action right here won't turn out to be exactly like this price action right here, where we created a higher low and then we just continued up. We still need more structure to decide that. And so in the meantime, I'm short on the S&P and also the NASDAQ. But if price action like this repeats, that's where I'll be looking for the evidence to close that short position and expect that we are just going to continue up on that. I don't think it's likely, but I'm a technical analyst and you have to be prepared for anything. Now, obviously, all markets are kind of in a state of panic right now. Not only has the S&P come down, the NASDAQ has also come down, still looking for similar evidence over there. And this has put people into a state of panic. And that is why when Bitcoin in particular drops hard on a Friday, price will generally continue to push down on the weekend. And the reason for that is because on a weekend, all other markets close. The only thing that you can de-risk from and sell out of is crypto. So we have had a slow bleed continue this weekend, but the fact that it's a slow bleed shows you that it's just retail panic, fear, all that sort of stuff, thinking that the market's going to open and be a lot worse. And if the market is a lot worse, they rather just get out now than going further and further into losses. So that's what I believe is happening over this weekend. And it's also why I think maybe we'll get a short-term recovery just to make them think they made the wrong decision. They get back in, and then eventually maybe, I don't know when, a week or two, we get further downside. Or could even be just a day of upside and we get further downside. We have a look at the Bitcoin dominance. We can see that it has now finally broken this ascending triangle. It's making its way up. That 60% region is the one to watch. It's still a fair way away at the moment, but if the dominance does continue up towards that 60% kind of region and the price of Bitcoin continues down, your altcoins are going to absolutely bleed and you're probably going to feel majorly destroyed. So keep an eye on the Bitcoin dominance. It's probably a time to stay hands off altcoins, but also make sure that you are charting the altcoins that you want every single day, because whilst they may go into a major bleed, it's also going to present the best opportunity for you to buy when the time is right, when you finally see those altcoins bottoming out and when there is maximum fear. That is going to be the time to go into altcoins, and that really could be 1, 2, 3 months away. So this is the time that you have to pay major attention, and if you can do that, that will pay off in the long run. It may also be a time that you have to make some really serious decisions about things that you might be holding on to that are in the red, and consider cutting your losses before it gets any worse, because then maybe you can use those funds in the future to recover a little bit faster. It's tough. It's not going to be easy. We hate this. But at the end of the day, when times get this tough, they present the future best opportunities.